Welcome back to another episode of Palisade Radio. I'm your host, Karim Mamutlu. And on today's show, we welcome back Rick Rule, who's the president and CEO at Sprott US Holdings. How are you today, Rick?
Delighted to see you again once a year for our visit in London.
Yes, we're currently at Mines and Money in London. How's the show for you so far, Rick?
It's been a great show. You know, London has a long history in mining. There's a lot of intelligent investors here. There's a lot of issuers here. So it's been a very good time for me.
Let's talk about gold. Gold appears to be consolidating from the run-up within the summer, and sentiment appears to me to be quite muted still. Is this range-bound consolidation good for gold before a bigger move higher from a sentiment point of view, Rick?
I can't talk about it from a sentiment point of view, frankly, because that isn't within my skill sets. Looking at markets historically, the fact that the market is going up slowly, as we call it, climbing a wall of fear, is extremely healthy. These sort of meteoric rises, while they're amusing, are usually followed by meteoric declines. And the fact that gold is lurching higher and then backing and filling is evidence of an extremely healthy market from my point of view.
Recently, we saw that Kirkland bought Detour Gold. Is this the beginning of an M&A cycle within the mining sector, especially for the juniors? And if it is it only a matter of time before the best of the juniors gets taken out? What's your experience of this, Rick?
We have been in an M&A cycle, I believe, for 12 to 18 months, and I believe it has another 18 to 24 months to go. It's been an important theme in my own investing and certainly in Sprott's thesis. And M&A, by the way, is extraordinarily healthy. There are too many names in the mining space. There's too much general and administrative expense. If for no other reason, getting rid of G and A organically is a very good thing. But let's talk a little bit about M&A and about the attributes of M&A that investors such as your subscribers need to know. In the first instance, larger companies are more liquid. They trade higher volumes and have higher share prices. All that means lower cost of capital. Mining is a capital-intensive business, and if you have a lower cost of capital than your competitors, you outcompete them. The second thing is that the industry, as we said earlier, is plagued by too much general and administrative expense. Mergers reduce general and administrative expense as a function both of assets under administration and also EBIT. So that's important. You also give directors the ability to make investment decisions, optimized investment decisions across a broader asset base. And finally, you can dispose of marginal assets, those controlled both by the acquiring company and that by the company that was acquired, and focus on assets that you consider to be your core assets. We think money will be made identifying companies that should be acquired, not just because they're selling at lower multiples than their competitors, but also because they control assets that are strategic to their competitors. So we think this is a very important theme, as this particular merger demonstrates.
Rick, you've had a very successful career, and I wonder throughout your career if you have actually changed your approach as a speculator. Recently, I interviewed David Morgan, and one of the things he pointed out was that he became more patient the older he became, and he got better at waiting for the market to come to him to reveal an opportunity. So what are your thoughts on patience and age as a speculator?
I learned patience, frankly, in my 30s. It is ironic that now in my 60s, as I have less time on Earth, I'm more patient still. sort of an odd irony. What happens when you're younger is that you come to believe that what you think or what you would prefer matters. What I have learned is that cycles take 5 or 6 or 7 years, and while you might prefer that they took a quarter, your preference is irrelevant. With regards to speculating in mineral exploration, what you're really doing is you're attempting to answer some unanswered question. If you are doing anything other than that, you're making a mistake. And in my experience, it usually takes 12 to 18 months to answer an unanswered question. So if you're buying a stock in anticipation of something that will take a shorter amount of time, you're lying to yourself, and there's just no particular point in doing that.
You have stated in the past that the best people end up building the best companies. Early in your career, I imagine it was a lot harder to figure out who had the potential to build the best companies. So what would you say about having a hunch or someone just starting out in the mining sector? And do hunches and intuition play a role when seeking out high-quality people?
There are people who have intuition about other people. My wife is one. I am not. I think if you have an intuitive sense of somebody's honorability and honesty and intensity, that's a good thing. I don't. I have to follow through on a process. One of the things that I try and do is learn as much as I can about the person I'm going to interview and the subject that I'm going to be discussing with them. And I try and ask new people questions where I know the answer and where they will believe it's in their short-term interest to lie to me. And if they lie to me, I never talk to them again. That's my initial screen. Interestingly, early in my career, I was able to associate with extremely high-quality people. And I'm not sure how that occurred. I'm really not. I look back now and say, how was a young Rick Rule able to attract at 22 Adolph Lundin, a superstar? Some of the other people that I was able to do business with very early on in my career. And I don't have an honest answer for you. My suspicion was that early in my career, I worked so hard and I was so intense that older people who became mentors were thinking in their own mind that they would exchange knowledge in return for energy. That's the only thing I can think of. I was extraordinarily lucky in my 20s in terms of the people I associated with. I had no way to deserve that much luck.
Let's talk about market cycles and the nature of investing when things are hated. Do you still have a hard time buying things when they're out of favor and cheap? Or is the process of buying something cheap now hardwired into you as a speculator?
That is so hardwired into me that I seek it out and I'm early. It's almost as though I have a desire to be punished by being lonely. One of my faults is that I have a mind that's rational to the point of being linear. Poor, if you will, peripheral vision. I believe if A is true and B is true and C is true and D is true and that the logical outcome is something. My difficulty is that I confuse two words in English, one of which is inevitable, which I usually get right, and the other is imminent, where I'm often very, very wrong. So I'm guilty of a sort of a perverse bias against conformity. I actually relish circumstances where I'm extremely early and extremely alone, and that's actually been costly. If you think about being 4 years early on a theme like uranium, if you discount your performance at 10%, which is a reasonable speculative discount, if you're 4 years early, it's arguable that you're wrong. 10% compounded working against you means that you're down 50% at the beginning of the exercise.
Rick, if you could start your career again, what would you change, or would you have done anything differently? Is there anything you'd perhaps wish you'd learned earlier within your career?
Ironically, if I had started my career earlier, I probably would have gone into the insurance business. I'm fascinated academically with the subject of risk. And the idea that in insurance you have the one risk, which is on the front end, the underwriting risk, and on the second end you have the investment process. But probably had I to do it all over again, I would do insurance because it fascinates me. But the truth is that I've led a wonderful life. I've surrounded myself with great people. I've been endlessly fascinated with what I do. The turning point in my career for success might be interesting to some of your younger listeners. When I stopped worrying about making money, when I started focusing on just enjoying what I do and delivering value for people, literally within a quarter, I started making more money. If you understand that money comes from delivering utility to others, and you focus on delivering utility to others, particularly if you enjoy what you do, you become an immediate success. I've competed against many people who my suspicion is were brighter than me in my career. But their goals were to have a Lamborghini or a nice house. Their goals weren't to deliver value for other people. So although they were likely smarter than me and more determined than I was, professionally I crushed them because they didn't show up. Their goals had nothing to do with competing against me. And so if I was going to give a piece of advice, I would say find a vocation that you would do for free if it didn't pay so well. Don't focus on making money. Focus on making money for other people and learning what you do. And the money will inevitably follow, and the money will be larger than you could imagine when you set out to become a success.
Some excellent advice there. Okay, as we begin to wrap up, Rick, let's talk a little bit about Eric Sprott. A lot of investors have noticed that this year especially, he's been financing many undervalued silver and gold mining juniors. Does he believe, like you, that we are still early into the party for gold and silver then?
I don't know the answer to that. Eric he's one of those intuitive people. He has amazing market intuition. And Eric believes that the entire financial system is due for a fairly proximal reset. Eric is speculating on a $2,000 plus gold price and a $50 plus silver price. That outlook and his own certainty in it, and the fact that he's an extraordinarily wealthy man and can risk relatively large amounts of money and can psychologically tolerate very large losses, means that he can afford to be extremely speculative. Eric's discipline, but his willingness to take risk, is what's made him a billionaire. If you add on to that, employing empirical financial processes for so long that they became intuitive, gives him an extraordinary advantage in today's market. Whether or not he believes we're early on in the cycle is a question that you would need to ask Eric. But certainly from Eric's point of view, he is more willing and more able to take 80 or 90% losses on individual positions in hopes of generating gains on the order of magnitude that he did with Kirkland Lake, which was certainly a multi-$100 million win for him.
Excellent. Okay, as we wrap up, is there anything else you'd like to talk about today, Rick? And what have you been up to at Sprott US Holdings recently? Well,
Sprott US Holdings has, we went through a very hard 7-year period in the bear market, and I'm delighted to say that we're growing in every regard. We're attracting very bright young people to work for us. We're attracting new clients. We're having a spectacularly good time, which is fun. In terms of wrapping up, I'd like to wrap up like I always do when I talk to Palisade and say if any of your listeners are interested in what I have to say, we would like to offer up a no obligations portfolio review. If you were to email me your natural resources portfolio with both names and symbols in the text, not as an attachment that an old Luddite can't open, I will rank your portfolio on a 1 to 10 basis and comment on those stocks where I think my comments might be of value and email it back to you. You should email me at rankings, RANKINGS, at sprottglobal.com. And I really enjoy this process, by the way. It's a real way to get a sense of what the market believes by looking at several hundred portfolios. So believe me, I benefit as well as you do.
Well, many thanks again for your time today, Rick. It's always great having you on the show.
My pleasure. Thanks for coming by. Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip your face off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?